All right. Hi, everyone. Welcome to day one of Synergy Traders number 49. It's our annual Tech Wizards conference. So we're going to have some top educators providing actionable info on software, indicators, algorithms, apps, tools, and platforms to help you make money in today's markets. So this event is a production of myself, David Kosmeter of TimingResearch.com and Anka Metcalf of TradeOutLoud.com. Of course, all of these presentations are for educational purposes only. Please only trade with money you can afford to lose. Trading is not suitable for all people. And please consult a financial advisor and like I said, only trade with money you can afford to lose. So all of these sessions are being recorded individually, and those will be available on TimingResearch.com as soon as I can get them processed. Also, if you search for Timing Research on YouTube, your favorite podcast app, or Substack, you can find them there as well. So today we're going to open with our keynote speaker for the event, Daniel Sinnig of TradingIndicators.com. So there he is, and you should be seeing his screen right now. Hey, Daniel.
Hey, guys. How's it going? Good morning, everyone.
Thank you for being here. So I'm to open the event, so I'm going to go ahead and turn it over to you.
Perfect. Well, thanks, David, for the nice introduction and for the courtesy of asking how to pronounce my name properly. So thank you so much. And welcome everyone out there. We do have an international crowd, which is awesome to see. I am hailing from Montreal in Canada. And this is our headquarters, the headquarters of TradingIndicators.com. And I am super stoked to be here today. And not only because David is a super nice guy, and I met him at several occasions, and it's always fun to be with him. But secondly, it's also the topic of the conference. It's just it's made for us because once I explain our background, you'll see that actually our background of trading indicators is almost 100% in tech. This is our domain. This is what we studied, and we are using tech to provide better trading tools, which will help you traders to make better trading decisions. All right. So, but before we get started, perhaps let me introduce myself a bit more in detail. And so my name is Daniel Sinnig, and as you perhaps can hear by my accent, I'm from Germany, and I moved to Montreal, which is a great place, many years ago, more than 20 years ago by now. And back in the day, the objective in my life was to become a professor in software engineering. So unrelated to trading. That was my objective. So I went through all the hoops. I did my master's, my PhD, a postdoc. I was teaching at various universities here in Montreal with the objective of becoming a professor in tech and software engineering. I even have a profile on rateyourprofessor.com if you want to check it out. But you know what? At the same time, while I was doing all this research in computer science and software engineering, I was always fascinated by the world of trading, and I just traded at the side. And as I started out trading, I, of course, just like anybody else who starts off, I made all the mistakes that many people also do when they start. I overtraded. I took too much risk. I revenge traded. I traded when the market conditions were not right. And you know what? After donating quite a bit of money to the markets, I took a hard look in the mirror and realized that, man, trading is hard and I need help. And for me, as a software engineer, needing help meant I need better tools that will help me make better trading decisions. So I rolled up my sleeves and I started programming. And most of the tools that we put on our online store on tradingindicators.com, they were first written for our own sake to help us at Trading Indicators, or me in the beginning, to make better trading decisions. And once I realized, hey, this actually works and this actually gives me an advantage, and we decided to put them out in our store to make them available to the public. This is really how the story of tradingindicators.com started. And this has been quite a ride since the very beginning. And by now we have clients all over the world, and in Canada, in the US, in Europe, in Asia, Australia, and so forth. We cater to retail clients, we cater to institutions, to trading educators, and we do have all one common mission to help each other to make better trading decisions. So, but I'm not alone, of course. Trading, I believe, like most things in life, is a team activity, and I am joined in this adventure, in this business, by my business partner Homa. She's manning the chat today as well. She's here. Hi, Homa. And Niklas. Niklas does most of the programming for us at Trading Indicators, who's also in the chat today. And they're both, we'll be looking out for your questions. So guys, if you have any questions, please don't be shy. Put them into the chat. This could be a technical question. It could be a question about looking at a specific symbol or anything you want to ask. Put them into the chat. The more the merrier, and the more interactions we have, the more fun this session will be. Just a few more words about TradingIndicators.com, the business. We've been out there for almost 10 years now, and we've built ourselves more than 700 trading tools, trading indicators, fully automated strategies, trading scanners, dashboards, and so forth. So we've seen it all. And there are a couple of basic guidelines that that is centered into everything what we do. So for example, we do believe very strongly in technical analysis. To the extent that we believe that everything fundamental is already priced in. This is based on the efficient markets theory, that everything that comes in from the fundamental point of view is priced in immediately and therefore available on the price chart. And if you do technical analysis on your price chart, you will be able to take into account these fundamentals as well. So that's one of our key principles. Of course, sometimes we do look at fundamentals to the extent that, if big news events are happening, we do not trade altogether to avoid these risky and more volatile times. All right. We also believe that trading should be simple. And you know what? It is simple if you know what to look for. And this is not always easy to see what is important and what is perhaps less important on the price chart, but we do have a solution for this. And guess what? This solution is anchored in a tool, an indicator, which will help you to look what is important on the price chart, to see what is important on the price chart. And this brings me to my next point. We also believe that the right tech, the right indicators, the right trading tool will make your trading life easier. Now, we strongly believe in this because as a trader, you don't want to be overwhelmed. You don't want to spend time with stuff that a tool can do. Because as a trader, what's really important is to spend your energy, your brain power on making the final trading decision. But all the other heavy lifting, all the tedious work should be done by a tool or an indicator. So you don't have to do it. So you can focus on what is really important in trading. And last but not least, we are strong believers in teamwork, not just among ourselves at Trading Indicators. So Homa and Niklas and I, we work together as a team, but also with our community of traders. We see ourselves as technology providers where we provide our community with innovative indicators and trading tools. But at the same time, our community gives back to us in form of feedback and form of suggestions or anything which will help us to further improve our tools further. And this kind of cross-pollination is really what we enjoy the most. It's really a back and forth between our community and us, and together as a team, we're trying to become better traders as a team. All right, enough about ourselves. Just before we get started, real quick, the disclaimer also from our side. Keep in mind when you trade that trading does contain substantial risk and therefore is not suited for every investor. If you trade, only make sure to only use risk capital, which is capital that should you lose it, it should not affect your lifestyle. When it comes to backtest or hypothetical performance, keep in mind that this is not necessarily indicative of future performance. All right, so now that the lawyers are happy, let me get started with today's presentation. Now, so we had one idea, a big idea that we developed about a year ago, and since then we focused our efforts on that. And the idea was that charts have landmarks. We call them liquidity zones, like important areas on the chart, which have certain properties. We call those magnetic properties. And if we are able to spot these landmarks or liquidity zones on the chart, and we know where they are, we can estimate or do an educated guess that price might be going towards such a landmark. And if we're able to spot these on the chart, we can build trades around that. And this presentation is all about these important zones on your price chart, which have these, these very interesting properties, and how we can find those zones and how we can trade with these zones once we know where those are. So let me give you a bit of an introduction of what we mean by this in particular. So as we all know, and if you've traded for a while, you definitely are familiar with this. Charts are, at first glance at this, quite unpredictable and noisy and messy. So look at this chart here. It's it looks quite erratic. So an uptrend in the beginning of this chart here, finally reversed to a downtrend, then again to an uptrend. It sounds like a complete mess. And lots of charts at first glance tend to look like this. Just imagine here at this point in time, we didn't see this future price action yet. We're right around here. We have this some sort of an uptrend here. And you may think, okay, price is trending up, so let's perhaps consider a long position. But what happens next? Well, guess what? As oftentimes the uptrend does not continue, it reverses to a downtrend, and then to an uptrend again, and so forth. So it's erratic, it's unpredictable. So it seems. Let's push this one step further. Now, there's also oftentimes a lot of noise on the chart. If we look at the these bluish areas here, we can see that price, tends to just go back and forth somewhat in that range. We don't really know what's going on. Is this going to be eventually a bullish move or a bearish move? It's very hard to tell. And but this is what price does. This is what price action typically tends to do. Now, the real question is, can we spot these areas where price potentially is ranging, or areas where price is breaking out and trending? Can we spot these ahead of time? Is this possible? Can we make sense, in other words, of the noise? Is this possible? And the answer is yes, it is possible. So let me explain you how this is possible. So, and just to add on to this, that on smaller time frames, it is sometimes really, really hard to see the big picture. Consider this 5-minute chart here. Just by looking at this snippet of the chart, it is very hard what is actually going on. So price just seems to be completely erratic. And on smaller time frames, this is typically what you see. And you may, if you zoom out, perhaps, I don't know what this chart was in particular, if you zoom out, you may actually realize, hey, if I'm on the 30-minute time frame, or perhaps even higher, we are actually in a ranging pattern. And this price action actually makes sense because it's ranging between support and resistance, for example. So on smaller time frames, it's really hard to see what is actually going on. And the solution sometimes is to actually zoom out, increase your time frame and look at the big picture. And once you look at the big picture, you can identify, more important trends, overarching trends or patterns on your chart. For example, if you zoomed out from this 5-minute chart to perhaps the 5 or 4-hour chart, you may realize, hey, actually we are, even though we've been ranging for a while, we were actually in a strong uptrend. But this is only possible once you zoom out. Okay, now moving on. So I mentioned earlier our original idea that price do have landmarks. Now these landmarks are not arbitrary; they actually are there for a reason. So what is an example of a landmark? A landmark could be an historical high, like an all-time high. We just had an all-time high in the S&P 500s. Yeah, price made an all-time high. This is a landmark. Or a landmark could also be a zone of price or a range of price which has been visited and revisited over and over again. This also forms a landmark. And there are other ways to find these landmarks. And the interesting thing about these landmarks, if we can spot them, is that price tends to revisit them in the future. Example here, we had this historical high, and see what happened. Further down the road, price approached that landmark, that historical high, then rebounded. Or look at these repeated lows or pivot lows. Scrolling to the future, price revisited that zone and rebounded. And these are interesting properties on the chart, which what we call have these magnetic properties, where price tends to go back to, tries to be attracted to. All right, so these are landmarks. And the question is, how can we spot these landmarks? I'm going to continue with this in just a bit. Now, these landmarks in trading jargon are typically also called support and resistance zones, liquidity zones, and so forth. So different words for that, which is not really important to to use a specific term. Important is that we can spot these landmarks on the chart. Now, what creates these landmarks? Now, keep in mind that these are not chosen arbitrarily. There's actually a reason why there are certain zones on your price chart which have these properties. And this reason is anchored, just like with anything in the economy, on supply and demand. Excess supply creates resistance, and excess demand creates support. That's what everybody says. But what does this actually mean? Well, let's look at this chart here where we had a couple of pivot lows. You can see it here. Price is not going further lower than this. Instead, it's rising, revisiting this pivot low, rising again, revisiting, rising again. But what creates these pivot lows and this apparent zone of support down here? Well, what really happened here is that demand exceeded supply. Big buyers came in, big money came in, big block orders came in, which bought off the sell orders perhaps of retail traders, of smaller traders, and created this this footprint, this floor on the chart which price cannot penetrate. It seems to stop at this area. There's a strong area of support. And the reason for this is because we had demand exceeding supply. And vice versa, of course, we can make the same case for the opposite case, where supply exceeds demand. Again, here, big money orders are coming in at these areas, creating these pivots, which is revisited once again, which is a very common phenomena. Price pivots again and then continues the downtrend. And this, again, is created by big money orders coming in, big sell orders, buying out all the buyers and creating this limit on the price chart, this area of resistance. Now, these orders, these big orders, are typically not the retail traders. They are the big players in the market, the whales, the institutions who, have the power, the buying power or selling power to create these floors or limits on the market. Yeah, and you know what? It is not really our role as a retail players to make these landmarks on the chart. These are actually created by these big players. We don't have the buying power to do this. But what we can do as retail players, and this I think is the point I'm trying to make, we can identify these landmarks on the chart and formulate trades around those. Because we know they are there. We've seen them before. They tend to repeat themselves. Therefore, we can use those to our advantage. And this is what this presentation is all about. How can we find these landmarks and use them to our advantage as retail players? We are not able to create these landmarks. These are done by big players, by the culprits, but we can take advantage of them. We can follow those patterns. Now, these landmarks, if they have certain properties, are typically around support and resistance zones, and we call them liquidity zones if they coincide with an above average volume in those areas. And if this happens together, and this formulates a strong landmark, a strong liquidity zone. And once we're able to find those zones, we can take advantage of those. So just by looking at this, this chart, which I'm going to show you in a second, is that these zones do have what we call magnetic properties, where price is, magnetically, magically drawn to. So if you look at this chart here, if we were able to identify these resistance or support zones, we can oftentimes make an educated bet that price will go towards a resistance zone and bounce off from it towards the lower support zone, bounce off again, and bounce again, and so forth and so forth. And once we are able to find these zones, guess what? We are able to create all kinds of trade setups around that. For example, we could bet on the fact that if price is approaching an upper resistance zone, it will bounce back. Vice versa, if price is approaching a lower support zone, it may bounce back. If price, for example, breaks or powers through a zone, we can bet or make an educated guess that, hey, once we have a zone break, price will continue in the direction of the zone break. And there are all kinds of setups that you can do, that you can trade once you know what these zones are. But now the question is, and perhaps you ask this question to yourself right now, how do we know where these zones are? How can we find those zones? That's exactly the same question that we have asked ourselves as well. How can we spot these zones? Now, we have spent the last 12 months or even a bit longer to create an indicator designed to do exactly this, to spot these zones for us so we don't have to do all the manual work to find these pivot highs, these historical highs, and so forth. The indicator will do it all for you. And we call this indicator Liquidity IQ. I'm going to show it to you in a second. But before I do, here's what we had in mind when developing this trading tool, this indicator. It is what we call your charting assistant, because once applied to the chart, it will show you right away what are the important areas, the important zones, the important landmarks on your chart. Okay. It will also show you more stuff. It will show you important events that will happen on your chart. For example, a zone break, which will happen eventually, a liquidity capture, which is a special phenomenon I'm going to discuss in a second, and so forth. And the reason why this indicator exists is because it will show you these zones as soon as it is applied on the chart. It will show you all these events as well. And this is, as you will see in a second, a big help to every trader, because this is one step less that you need to do in your trading process to eventually make a trading decision. And the fewer steps you have, the fewer things you need to do manually, the better it will be, because the more focus you can have on making the final trading decision. Now, without further ado, let me show to you how this indicator works. And for this, I'm going to open up a TradingView chart. So let me just quickly go to my TradingView. And there we go. All right. So this is TradingView. I'm going to use TradingView as an example platform here. But this indicator, it exists for various platforms such as NinjaTrader, MotiveWave, MT4, MT5. So we have it for various platforms. I'm going to show it here in this presentation for TradingView. All right. So the indicator is applied to the chart, and what I'm going to do now, I'm going to ease you into it, because this indicator is actually quite powerful with a lot of features. I'm going to build up on these features step by step. So when you first apply the indicator to the chart, the first thing that you will see, and let me just give you 1 second. Just going to change the setting for 1 second. All right. So when you first apply the indicator to the chart, it will show you the most important resistance and support zones. Now, once you can actually see it directly on the chart right now. So we have one resistance zone up here, this greenish area. This is the nearest resistance zone. And here we have the nearest support zone. You see it right off the bat once the indicator is applied to the chart. And the beauty about this is that, you know where these zones are, and you can right away, right off the bat, think about a potential trade that you may want to do. Just to let you know, one trade could be if price actually goes down into this zone here, into this support zone, you may think of a rebound. Hey, price may rebound from the zone towards the middle again. Or vice versa, if price goes to this upper resistance zone, well, price may rebound again. So these bigger rectangles are the nearby zones of resistance and support. And one thing that's important to point out, you absolutely must think of these zones as really zones. These are not like exact levels of price. It's a range of price, because nothing really works to the dot or to the exact price. You always need to give a bit of a buffer. This is why we have these little rectangles around it, because it's really a zone. In addition to these nearby zones, the indicator will also show you, if I just zoom out a little bit, further away areas of resistance and support. So for example, here, this line is an area of resistance, which is a bit further away. And this is really the first thing that this indicator does. It shows you these zones. Now, we are here on a 5-minute chart of the NASDAQ futures. And the indicator, actually, one important thing to point out to how the indicator works to identify these support and resistance zone is it's actually quite clever. It does what we call a multi-time frame analysis. And the way it works is that the indicator, even though applied to the 5-minute chart, it will look at the 50-minute, 30-minute, 1-hour chart to identify these important levels of support and resistance. And the way it does it, it looks at a couple of things. For example, where were historical pivot points in this area, and was there excess volume in this area, indicating, hey, this is really an area where big players came in to place their orders. Because if you remember, these landmarks, they are created by big players putting big block orders in. So we want to spot these areas. All right, so speaking about multi-time frame analysis. So let's say we're on the 5-minute chart, the indicator looks 4 time frames higher to identify these zones. But we have built in another feature into this indicator, which is probably one of our more popular features, is a pretend feature. We can tell the indicator, hey, instead of pretending, or instead of being on the 5-minute chart, pretend to be on a different chart. Let's say on the 30-minute chart, for example. What the indicator does, once I switch this over to 30 minutes, it pretends it's on the 30-minute chart. And then it looks higher up to perform its multi-time frame analysis to identify these landmarks on the chart. So if you're in the 30 minutes, it's probably going to look at the 1-hour, 4-hour, and daily chart to find these landmarks. So let's observe what happens once I switch this over. I put it to 30 minutes, it recalculates, and once done, let's see what happens to these zones. So it takes a second or two to recalculate, and my computer is not the fastest, but you can see now these zones have changed. They're now a bit further away. And the reason for this is because now the indicator pretends to be on the 30-minute chart, while we as traders are still looking at the 5-minute chart. So it's a very clever way of simplifying your life as a trader. There's no longer the need to open up multiple charts of different time frames. Instead, you can tell the indicator, hey, pretend to be on a different time frame, and do your analysis based on that assumption. All right. So feature number 1 is identifying these resistance and support zones. Feature number 2 is pretend to be on a different time frame. But there's more. So let me go back to the settings. I'm going to enable what we call the mentor mode. So mentor mode is, I'm going to enable this one too. Mentor mode is a feature which we have built in, which annotates important areas on the chart with labels and important events on the chart. So let's look what just happened. Let me just zoom out a little bit, make this a bit bigger. And here we can see that we have a couple of annotations. For example, here we can see that we did indeed this zone here, which I mentioned earlier, is a resistance zone. And this is the price range. Down here, we have our support zone in this price range. Okay. We also have these shaded areas here. You see this one here? It's a little shaded area. And let me show you another one. But further back, you also have these shaded areas. These are what we call liquidity captures. It's an event that happens every once in a while where price spikes up, it wicks up into an area of support or resistance, but doesn't exceed it, and the candle has abnormally high volume. This means that a big player came in and put in big orders at this level, creating big volume and driving price downwards. And oftentimes, if a support zone or resistance zone up here is coinciding with a liquidity capture, it's a telltale sign that price is going to reverse quite sharply. And we had this here. Look at this. Price went up to this area and then reversed quite sharply afterwards. Let me just change my time to New York time to make this a bit clear at when this event happened. So here, right at market open, price wicked up into this resistance zone, accompanied by a liquidity capture, and the number of captures that happened in that zone is written out here as well. And then price immediately reversed and went to the downside. Imagine a trade you would have placed here. You see this event, and this all prints in real time. There's no repainting going on here. This is all in real time. You could have taken advantage of the fact that price is approaching this resistance zone, and when accompanied with a liquidity capture, a reversal may be imminent. All right, just one more feature I want to show you. Let me just see if I can find one. So every once in a while, a zone is broken. Just find a good example. I'm going to show some other ones. So here, look at this arrow sign here. these are signs of a support zone being broken to the downside. Yeah, so this happens. Zones are broken, and oftentimes this can be, of course, there's always room for error, but this can be a trade idea where you can bet on the fact, make an educated guess that price will continue to the downside when such an important zone is broken. Support is broken, becomes resistance, and price may be going further downwards. And if we go back further back here we had another couple of zone breaks which didn't work out. So there's no exact signs, but the beauty about this setup, for example, is that you can place your stop right below this resistance zone. And even if you're wrong, you will not lose a lot because you can place your stop very tight. But if you are right, if you find a nice zone break, you might be in for a nice treat. All right, so this is the gist of our liquidity IQ indicator. And let me just quickly see in the chat box if there are any questions so far.
Daniel, actually, there's a question here.
Yeah.
Can you review again how liquidity IQ helps with multiple timeframes?
Yeah, so what liquidity IQ do, actually it does, it uses a concept which we have created in our lab, which we call multi-timeframe fusion. Sounds complicated, and actually under the hood it is quite complicated. But what it means is that the indicator will use price and volume information from multiple higher up timeframes, aggregate this information, fuse this information to come up with consolidated levels of support and resistance. So this indicator not only takes into account the current chart, let's say the 5-minute chart, but it looks also at the 50-minute, 30-minute, 45-minute, and 1-hour chart, for example, to aggregate all this information and consolidate it in these levels displayed on the chart, and also these liquidity capture events on the chart. So that's one thing it does. The second thing, what the indicator allows you to do is the pretend feature, which I mentioned previously. So if you go to the settings here, you can actually tell the indicator, hey, pretend to be not on your chart, on the currently open chart, on the 5-minute chart, but pretend to be on the hourly chart or the 30-minute chart or the 50-minute chart. And this saves you a lot of time. Why? Because you do not need to open a second chart. And look at this as well. In trading, it's so important to save your mental energy. And the fewer charts you have open, the better your focus will be, and the better your final trading decision will be. Any other questions, Homa?
Yes, a question here about, does it work across stocks, futures, coins?
Yes.
Can you talk about that?
Absolutely will. And I'm going to defer this question just for a few minutes because we're going to look at a bunch of stock examples in just a bit. But absolutely, yes, it works on all asset classes. So there's no restriction, and it also works on all time frames. So it's a super flexible indicator. And to us, it's always the starting point when we do our technical analysis, be it for day trading, like in this case, or perhaps for longer term swing trading. We apply this indicator as our starting point to see what are the important areas on the chart.
Can we take one last question?
Yeah.
What about the targets?
Yeah.
That's the question.
So good question. And it depends on your trade set, on the play that you have in mind. Let me explain to you. Let me give you an example. Actually, this is a great segue on what I want to say next. So, Holmes, if you don't mind, give me perhaps 5 minutes before I answer this question. All right. So going back to my chart. So great segue. Thank you, whoever asked that question. And now, one thing I like about Liquidity IQ, about this indicator, is it's a bit different from your everyday indicator, which perhaps may give you buy or sell signals, stuff like this. Because if you have an indicator like this, it's great to have, of course, but you have to wait around for a signal to come around. And this may take a while. But for Liquidity IQ, it will give you continuous trade setup all the time, because it will show you these landmarks on the chart. And there are so many ways how you can trade these landmarks once you know where they are. For example, you could place a magnet zone trade. I'm going to expand on this in a bit. You can place a bounce trade. A bounce trade is a trade where price approaches a support area, and you may bet on the fact that it will bounce off that area towards the middle of the range between support and resistance. You can place a zone break trade, a breakout retrace trade, and so forth and so forth. So we have a whole setup of these trades documented, and we discuss them regularly in our trading sessions with our members. And what I want to do now is I want to expand a little bit on one of these trades, which we call the magnet zone trade. Let me give you quickly the gist of it before I go back to the chart. Now, the idea is for the magnet zone trade that price is encapsulated. It means it's in between support and resistance. So that's one condition we need to have. Price needs to be somewhere in the middle of support and resistance, not at either end, but in the middle. Second step is we determine the direction of momentum. Sounds cryptic. I'm going to show you how this is done in a second. So just take it as face value. Step number 3, we're doing a Seinfeld move. So if you know Seinfeld, perhaps you remember the episode Do the Opposite, or The Opposite, where George suddenly decides to go against his instinct and does the opposite of what his instinct would tell you. And suddenly his life is turning around. He's meeting all these beautiful girls. He gets a great job. He's the center of the group. So it's really funny if you haven't watched it yet. But we're going to do something similar in trading. We're going to wait for a pullback against the intended trade direction. Again, sounds cryptic. I want to show you what that means. And once this pullback happens, we're going to enter into the trade. So this is the magnet zone setup. Let me show you an example of it. So back to the chart. And let me open up a stock chart. So Marathon Oil here, this is a stock chart, once again on the 5-minute time frame. And we have Liquidity IQ applied to this chart. You can see it here. And we can clearly see that price for this particular stock is somewhat in the middle of support and resistance. So condition number 1 for this magnet trade setup is fulfilled. Great. Condition number 2. If you remember, it's called in which direction is momentum pointing? Is it either bullish or perhaps bearish? So what do you think by looking at this chart? Is it more bullish or more bearish? And you may say, maybe it's not as clear cut. The price has been quite bullish since here, but then it retraced and now up again. So in which direction is momentum pointing us? It's not that easy. But you know what? We have an indicator for this. As you can see, we are all about indicators that make our life easier, which lift us from this burden of determining many of these setup conditions ourselves. So this indicator is called MA Rush. Let me quickly enable it. I'm going to enable and make this visible. And what this indicator does, it will show you by means of these labels here, these shaded areas, what is the current momentum for this particular stock on this time frame. You can clearly see here, it's bearish. Before this was bullish for quite a while, but then as of, when was that, January, or the end of January, beginning of February, it turned out to be bearish. So our momentum is bearish. Great. Now, what did we just learn? So price is in between support and resistance. We know that these areas have magnetic properties and price is likely to return to one of them. And the question is, to which is it going to return first? And guess what? This question has already been answered for us by our momentum indicator, which is bearish. And according to this magnet zone setup, this will tell us that price is going to return to the lower support zone first. This is exactly what this tells us. So we can formulate a trade around this, that price will go further down. Great. So now we know what our trade is going to be. But if you look where price is right now, it's somewhat in the middle of these zones, and our target is somewhere around the support zone. Our stop must be somewhere up here above the resistance zone, because our bet is the price will continue bouncing back and forth. But that's a far stop away. Our risk-reward ratio is less than 1-to-1. And it's probably maybe 0.75 to 1. So we can gain less than what we could lose. So this is where the Seinfeld move comes in. Do the opposite. We're going to wait for a retracement for price to go higher, because we don't want to chase anything. We want to dictate where we want to enter into this trade. So we're going to wait. Let me just annotate this a little bit with a little note tool here, if I can find it in TradingView. Computer's a bit sluggish. No, measure is not the right one. Where is my tool? Just a second. we're going to wait, there we go, for price to retrace perhaps towards this area. Now, this is a move of price against our intended trade direction. That's why we call it do the opposite. It's very counterintuitive, but it is a powerful move because not only will we improve our entry price, but we will also improve our reward risk ratio. And once price is up here, suddenly we can gain more than we can lose. And then trading, this is a very powerful move because we're going to get this better entry price, this better risk reward ratio. Of course, the downside is that, we may miss that trade. Price may never go up this far. But in trading, it is better to miss a trade than entering into a bad trade. Trust me on this one. And the reason why I say this is because there are so many stocks, so many sims that we can trade on so many different time frames. Missing out on one of them is not the end of the world. But it could be the end of the world to enter into a bad trade. Okay, keep this in mind. All right, so we're going to do the opposite. If price retraces to this area, we're going to enter by means of a sell limit order into this trade with the target being nearby the support zone. And I hope this answers the question of where our target will be for this particular trade setup. We have other trade setups that can be done with Liquidity IQ, such as a bounce trade or a breakout trade, where the targets will be different. But we're going to teach you all this in our member sessions and our community sessions that we offer every week. So this is something we teach you once you become a member of our trading community. All right, so let's look at another example of this magnet zone trade. Let's switch gear a little bit. Let's look at Square. This is some stocks we looked up. I looked up before this presentation. Also here, this is Square on the 5-minute chart. Let me just make this a little bit bigger so we can see what's going on. So once again here, what do we see? We see price again between support and resistance. Great. Condition 1 for our magnet zone setup is fulfilled. Condition 2, where is momentum pointing us? Well, MA Rush is already applied to the chart. And look at this label here. It is bullish. It just turned from bearish to be bullish. So now, what is our educated bet? Well, it is that price will first visit this resistance zone up here. This sets up for a long trade. All right, so we know now what is the trade direction. Step number 3, do the opposite. We're still going to wait for a retracement, perhaps towards this zone down here. Let me just draw this in, perhaps down here. Wait for a retracement and enter long into this trade with our target being nearby this resistance zone and the stop loss somewhat near the support zone down here if it shouldn't work out. Another example, Shopify. What do we have here? Price once again in between support and resistance. All right. What is momentum telling us? Let's enable MA Rush, our momentum indicator. It tells us it is bearish. All right. So momentum is still bearish, even though it may switch in the near future because price has been moving up quite a bit, but it is still bearish. So once again, our educated bet would be that price will visit this support zone first. But first, we needed to retrace a bit further to get a better risk-reward ratio, and so forth and so forth. So this is our magnet zone setup. And if I go back to my slides for just a second, there we go. There's one tool which I used to trade this setup alongside Liquidity IQ. And this tool was called MA Rush. And MA Rush is the companion, if you may, of Liquidity IQ because it complements it very nicely. And MA Rush is designed to, once again, do a multi-time frame analysis to determine in which direction is momentum pointing to. Is it either bullish or bearish? And this is what MA Rush is designed to do. It's a very simple indicator, and there's very few configuration needed to apply this indicator. Typically, I just apply it with its default settings to the chart. Once applied, it will clearly show me in which direction is momentum pointing. And I use this as one of my criteria in my trading process, because eventually I need to decide on the trade direction. And MA Rush will help me to do this. If price is in between zones, it could go either way. But is it really just a 50-50 coin toss? No, because we can consider in which direction is momentum pointing. and we can use this to our advantage. And this is where MA Rush comes in. And you know what? Together, Liquidity IQ and MA Rush, we call this dynamic duo because they complement each other so nicely. And once both are applied to the chart, you'll see that they will do most of the heavy lifting for you, therefore simplifying your trading process. All right. Now, we're going to take questions in a second. But before I do, I'd like to point out that we do have, we just have a bit of time. We do have a special offer for you for this duo, for this bundle of MA Rush and Liquidity IQ. And we offer this special offer for TradingView, NinjaTrader, Modif Wave, and MT4 and MT5. So if you have any of these platforms, you can take advantage of this bundle offer. And this bundle offer is a lifetime license for Liquidity IQ, the indicator which does indicate or finds all these smart support and resistance zones on the chart. The liquidity captures the zone breakout events and so forth. So you're going to get the lifetime license of this indicator, which normally reaches at $9.97 at the same price. We're going to supplement this with 6 bonuses. And bonus number 1, as you may guess, is our MA Rush indicator. We're going to give it to you as a bonus if you take advantage of this bundle offer. This is bonus number 1. Bonus number 2, you will be invited to our next exclusive live trading workshop, where we will use both indicators, Liquidity IQ and MA Rush, to live trade the market using our own money, placing real trades. And you can follow along. You can ask questions. You can see how we look at the market, how we identify setups. And there are so many different setups. We only visited one setup today, the magnet zone trade, but there are so many different setups we can use with Liquidity IQ. And you're going to see many of these in our live trading workshop, which takes place on February 20th. So you will be invited to this workshop. You will also be invited to our weekly members-only trading sessions, where we explain to you tips and tricks around all our indicators. Be it Liquidity IQ or MA Rush or some of our other indicators, you will learn about all these in our exclusive member-only session. We also always do a market review to look at noteworthy symbols and setups that has developed over the week. So these are happening weekly, and you will be invited to all these sessions as well. Bonus number 4 is an ebook on how to use MA Rush. Bonus number 5 is our first video guide on the magnet zone trading strategy. The one I mentioned in this video, I can only explain it at its surface, its broad strokes, but there are some more details about it, which we explain in our video guide on the magnet zone trading strategy. And we've thrown another video guide on how to use both Liquidity IQ and MA Rush to identify trading setups. So you're going to get all these bonuses. And if you want to take advantage of this, is all for a lifetime access. All you need to do is to go to tradingindicators.com/zone. So tradingindicators.com is our homepage. And if you do /zone, you will get to a page which explains this special offer for you. Of course, this is a limited time offer. All right, so got it. Now, Homer, are there any questions at this point or chat requests which I can look at?
Yeah, Daniel, we have a request to see on a day trading time frame, MES and MNQ, so micro NASDAQ and micro S&P futures.
All right, so let me go to perhaps a 5-minute time frame. Let's see what's going on for our futures. So this is MES, the micro S&P futures. And let's see, once the indicators calculate, let's see what's going on. All right, so we can see this. We're clearly in between support and resistance, actually smack down the middle. All right, perfect. And you can actually see here, it's similar to MNQ. I think this is what we had before, that how nicely price bounced off this level here, and now it's going towards the center of it. And this sets up once again to a nice magnet zone trade. Currently, MA Rush is still pointing to a bullish direction. And if you have a retracement further down, we could bet on the fact that price will revisit the upper resistance zone one more time. One interesting thing here is, just since I see it, is that we had a capture count of 3. See it here? Which means that this area of resistance has been visited by high volume candles, only visited, not penetrated. We wicked out again. So we wicked in and then price dropped 3 times already. So that's interesting. That means this zone is quite significant, it's quite strong. And chances are that price will revisit this zone first in the future. And if we see a retracement of price, this could be a nice entry point into a long trade on the MES. And
Thanks,
I believe
Daniel.
it's quite similar on the MNQ. If I just open this up for 1 second. Sorry, Nicholas. Let's see what we have on MNQ. Yeah. Once again, here we do have price being in between. Here now we are bearish on MNQ. And perhaps interesting, this could be a short-term play towards this support zone down here. That price will continue down here before bouncing back into the middle, which could play in nicely with our anticipated retrace move first on MES. And price should retrace a bit further before we enter into a long trade towards the resistance zone. Yeah.
Perfect, Daniel. And we have another one for another chart request for some sort of Forex.
Yeah. All right. Which one?
Any. They just wanted to see if it works on Forex. Maybe Euro USD.
Okay. That's the Euro USD. Perfect. On FXCM. As I mentioned before, the indicator does work on all asset classes. It doesn't matter whether you trade FX or, let me just see what's going on here. All right, here's an interesting setup. Something that we will teach you in our sessions. Actually, here we have, what do we have? Oh yeah, price. Look at this. Actually, quite nice setup. Price is very near the lower support zone, so it's not right smack down the middle. Between support and resistance, it is very low the support zone. And look how it bounced off here. And this is exactly what our bounce trade is all about. I didn't have time to detail it in the session, but if price is near that zone, you could bet on the fact that price may continue or may bounce off the zone and continue towards the middle area of the zone between support and resistance. And your stop would just be below this support zone, and you target somewhere in the middle of the zone. So you're betting on a bounce of that. And this is even stronger if it were accompanied by a bullish momentum indication of MA Rush. In this case, it's bearish, so I would take this with a grain of salt. But sometimes you have MA Rush being bullish, and you have a bounce setup, which makes it even more powerful. All right, perfect.
And
so,
Daniel,
yeah.
Sorry, we had one question here from DJ Davis. Wanted to know those sessions you were talking about, or maybe this webinar as well. Do you do teaching sessions like this often, like weekly?
Every week, yeah. So actually our next teaching session is happening in 1 hour. We have it every Tuesday at 12 p.m. noon Eastern time, where we invite all our members to join the session, where we teach you our view on the markets, tips and tricks of using the platforms, of using our indicators. And it's also an outlet for you to ask us questions directly there, which we can cover in detail. So yeah, absolutely. This is what we do every Tuesday at noon. And all our members will be invited to these sessions. Great. Speaking about these sessions, let me explain perhaps a little bit more about what is included in this package, in this Liquidity IQ super package. So of course you get the Liquidity IQ indicator, so this indicator, of course, which works very nicely on TradingView, but also on many other platforms. And you get the the real-time annotation of your chart. We call this our the ideal charting assistant, because it points at all these important areas for you. We're gonna complement this offer with our MA Rush indicator. MA Rush is the companion to a Liquidity IQ, which has the power of showing you where or which direction is momentum pointing right now. Is it either bullish or bearish? So this is also included. And many of our trade setups that we are going to teach you, either in our live trading workshop or in our members only sessions, they use MA Rush to determine the trade direction of the setup. We're also going to complement this with, one second, with our exclusive member sessions, the one that I just mentioned before, which happen every Tuesday. So they are very regular. They're all recorded. So if you cannot make it one time, no problem. We all record them and put them on our Vimeo page, to which you have access to as members. And you get all these additional ebooks and video guides on how to take most advantage of our indicators. So if you're interested, guys, go to TradingIndicators.com/zone. So zone like liquidity zone. All right. Any other questions?
Just to mention, we also have what we call tech talks every few weeks. So if you go to our website, I'll also put the link in chat. You can attend those tech talks by being on our mailing list. We send out the announcement every couple of weeks for that.
Absolutely. Yeah. So check out our YouTube page. Plenty of videos and all the stuff that we're doing. And you'll see there's plenty of content. And we'll do this actually very regularly. So multiple times a week on average. There's new material, either as a private members only session or as a public event. So yeah, we like to be out there. We like to, truth to be our indicators, explain them as good as we can. And we also put our money where our mouth is. Our live trading workshops where we live trade our own indicators and show you how we use them for our own trading. All right, guys. So if there was a question which I missed, don't worry, guys. You can simply reach out to us either through our homepage, TradingIndicators.com. There's a contact form which you can use to ask your question. And it will go directly to my inbox or Homer's inbox or Niklas's inbox, and we make sure to get back to you right away. So don't be shy. Ask us any question. Any feedback is always welcome. And yeah, I hope we hear from you, guys.
Before you
yes.
end it off, Daniel, you have a nice comment in here. Daniel, you do a very good job of explaining.
Well, thank you so much. Even it's a bit early for me, but yeah, I try to do my best. And if you want, come on board right now, and you can be part of our of our exclusive member session in just 1 hour from now at 12 p.m. Eastern. So in 1 hour, I'll be back online talking about our indicators and tips and tricks and all kinds of things. All right, guys. So thank you so much, guys, for listening. I know your time is precious, so I hope you get something out of this this talk and the importance of landmarks on the chart. Hopefully, see you soon. David, do you want to take over?